If you've watched some of my previous videos, you may have heard me mention investing. I covered the 50-30-20 rule, which is a simple method for managing your money. 50% of your after-tax income would go towards paying your expenses, 30% for your wants, but the most important chunk is setting the remaining 20% of your money towards investing. And today, we're going to learn exactly how you can invest the 20% so you can grow your savings to where you want it to be. Hi, this is Newfire, and I'm back with a new 2-part mini-series on how to invest. Primarily, there are two notable methods of investment. We'll talk about the second method in the next video, so for now, the first method is by investing through the stock market. The first thing anyone should understand when investing is that it isn't a surefire way to quickly get rich. It has its own risks and rewards. In most cases, you won't double your investment overnight. Instead, it'll likely take months or years to see substantial growth. On top of that, there is no guarantee that the company you choose to invest in will deliver returns every single time, and you may even face losses. Due to uncontrollable macroeconomic conditions, the value of your investments may go down. So now we know the risks, but let's hear out the pros. If and when you venture to buy a house, you'll be required to pay a down payment, but not for the stock market. Whether you have $10 or $10,000, anyone with an amount as little as $10 can invest. If you choose the right investment to pursue, you may be able to see 100 times return on that money. Anyone who invested $1,000 in Amazon in 2001, in 22 years right now, that would be worth $1 million. So when investing in the stock market, there are numerous strategies, but the main two you can implement are long-term investing and trading. When investing for the long term, you can find a good company, invest, and leave your investment alone for the next 10 or more years to grow. When trading, you buy at opening bell and sell in the afternoon. You should know though, trading is a full-time job and especially risky, so it's not a highly recommended avenue to pursue. At one point, Warren Buffett was the world's richest man alive. He didn't build his fortune by designing a viral product, nor did he establish a household name. He made all of his money by investing. This we may have all heard by now, but how did he get there? Well, for one, he started investing at the young age of 11. Next, he found and invested in valuable companies at a low price. Third, all his investments are long-term. When the stock market declines, many panic and sell, exacerbating the market decline. But rather than listen to the temporary noise, Buffett's strategy is to stay firm and wait it out. Even though you may have chosen a good company to invest in, that doesn't mean putting all of the money you have towards it. Buffett sets some money from a total amount towards a stock and keeps the remaining money on hand for other valuable opportunities that may come out. That's because investing in one company and one time isn't enough. You have a better shot at seeing good returns if you invest long-term in multiple different companies. That way you have a diverse portfolio and all of your money isn't concentrated in one sector. So these are the points that made Warren Buffett one of the most successful investors in today's world. But how can we start? Step 1. First, open a brokerage account with companies like Fidelity, Charles Schwab, etc. Step 2. Invest every month, or whenever you can. To be a long-term investor, you consistently buy new investments while holding all of your previous ones. And if you don't know where to start or having trouble choosing where to invest, you can always invest in an index fund. Index funds are diverse portfolios of different stocks, and when you invest in one, your money is going into multiple different businesses. Another method for newbie investors is to invest in things you know. Investing in familiar household names is a good place to start, but as you continue to invest, you should branch out and identify companies at an early stage that have the potential to grow. So after hearing all of this, know that on your journey to investing, remember that no investor is perfect, and everybody has or will face mistakes or losses. But what's important to learn is how to do your best to avoid the said mistakes and focus on increasing your gains. Though there are many risks involved in the stock market, if you overcome the short-term obstacles and choose suitable investments, you're bound to receive good returns. It can be hard to know when and where to invest, so start early to build experience and consider investing in index funds to find your footing. The best use of your money is to invest, and those who employ it properly are able to build good savings for their future endeavors. But investing in the stock market isn't the only place you can grow your money. Most wealthy individuals today have made some or a large part of their fortune through investing in real estate, the second prominent method of investment. I'll be covering that in the next video, so make sure to watch out for it. This is Newfire, signing out.